and what we call and reduce, and reduce is what saves times, and basically reduce, we say reduce what we call mistakes. So that is what we call, that is what you basically call sharper accuracy. So they're able to reduce what we call the audit time, but at the same time, the level of mistakes are also reduced, are we taken out. So we can also talk about full-on transparency. So you can talk about full-on transparency, full-on transparency. So whenever we talk about transparency, that is openness altogether. If you look at with a complete view of what we call the financial statements, financial operation, audit teams can deliver what we call transparency. So with a complete view of financial operation, with what we call a complete view of what we call of the financial operation, with a complete view of what we call the financial operation, with a complete view of the financial operation, we say teams can deliver what's called transparent. We say teams can deliver what's called transparent. Teams can basically deliver transparency. Teams can basically, teams can do what? Teams, we say, can deliver what's called transparent workload, and you say throughout the year. So you don't have to wait for the end year for you to carry out an audit. So it's basically spreads out the workload throughout the year. Using what you call, using chaos of end year crunch. Using what you call chaos of what you call of end year. The word is the end year crunch. Using the chaos of what you basically call the end year crunch. With this, we are also, it makes the process smoother and free time for important work. Makes what you call process, makes what you call the process, we call it easier, and we say free up time for what we call for important, free up work for important work. Free up time for what we basically call important work. So it basically does free up time for important work. So these are the benefits of what we call for important work. So these are the benefits of what we call a continuous audit. Team, are we together? Is that understood? Audit. Team, are we together? Is that understood? If that is understood, you give Mwalimu a yes. You give Mwalimu a yes. If that is understood, you give Mwalimu a yes. If that's basically understood, you give Mwalimu a yes. Respond with a yes if that is understood. I want us to move to the second question. I want us to move to the second question. Is that understood? On the benefits of a continuous audit? Eden, is that understood? We'll respond with a yes if that is understood. Give me a yes if that is understood. So the second part of it, you're basically being told, explain two challenges that it should be. This was Roman 1. Explain, we're told to explain what's called two challenges, and say of a continuous, So what are some of the challenges that basically comes with a continuous audit? Two challenges of a continuous audit. So when you have the auditors, are we together? When you have the auditors all around, what are the dangers of a continuous, challenges of a continuous audit? Again, whenever you're having continuous audit, there's definitely one of the challenges called business disruption, where you have to get workers there. They'll be always disrupted in terms of auditors will come and ask you for documentation. So one of it is what's called business, call it business and we call it disruption. We call it the business disruption. So you cannot do your work perfectly well. In between, if auditors are coming weekly or monthly in an entity, it definitely implies that work will always be disrupted. Is that understood? That is number one challenge of a continuous audit. But we can talk about which can reduces what called the work staff morale. We can talk about reduces what they call the staff morale. Remember, audits are very intensive, so when each and every 1 month you have auditors in an entity, it will definitely reduce what you call the morale of workers altogether. Then you have resource investment, what we call the resource. Number 3, we call it the resource investment. Is it cheaper to carry out a continuous audit? Is it cheaper to basically carry out a continuous audit? Is it cheaper to carry out? Is it cheaper? Then you have what's called privacy issues. When you talk about continuous audit, we have issues to call privacy issues. The beauty of this audit, it's very straightforward. The things that we've done, straightforward as they are, privacy issues. Are we together? So when you talk about privacy issue, continuous audit can basically affect continuous access to real data. With continuous, we can talk about with continuous access to what they call to real data. If you can basically access real data on a continuous basis, what is that? Protecting sensitive information, protecting what we call sensitive information. Are we together? Protecting sensitive information, protecting what you basically call sensitive info may be required. Protecting what we call sensitive information may be required. Protecting what you basically call sensitive information may basically be required. That means that you establish what you call a robust data protection framework. So that will basically require that you establish what you call a robust data protection framework together. So these are limitations of a continuous audit. But there's also a very good point that we talked about. You see, the management may leave the work to the auditors altogether. They may think that it is the work of the auditor. The management can rely on auditors to carry out their work. Management may rely on what you call on auditors to help in the work, to help. Give me a yes if that is understood. Perfect, thank you. So I want to move on question 1B. We'll look at question 1B. And as I repeat it, this paper is straightforward. As we work on this paper, we will see that this paper is basically straightforward. So let's look at the second question. And this second question is basically 10 marks. So you're being told that your firm, Zawadi and Associate, has been the auditor of Magari Limited. Your firm, Zawadi Limited, has been the auditor of Magari Limited, which has been dealing with motor vehicle spare parts for the past 10 years, which has been dealing with motor vehicle spare parts for the past 10 years. Due to the long association, a partner in your audit firm has requested to sit in Magari Limited board meeting to provide advisory service. To sit in Magari board meeting to provide what called advisory service. The company is one of your key clients for the past 5 years. Approximately 30% of the farm gross revenue has been obtained from Magari. Approximately 30% of farm's revenue has been obtained from Magari Limited, from assurance and taxation services. For assurance and taxation services. Last year, Magari Limited poached 2 audit managers. Last year, Magari Limited poached 2 audit managers from your farm to support the internal audit and finance department. To basically support internal audit and finance department. Then you're being told that in September 2025, Magari Limited issued shares during the initial public offer, that is IPO. Zawadi and Associate was involved in promoting the shares of the company. Zawadi Limited was basically involved in promoting the shares of the company. Before I begin promoting the shares of the company, Zawadi Limited was basically involved in promoting the shares of the company. Before I begin to read the question that follows, what are some of the clear things that you see in this relationship? What are some of the things that you basically see? What is some of the clear things that you basically see that may basically affect that relationship? What is some of the clear things that you see in this relationship? I want us to discuss and be very open. Yes, that is. What are some of the clear things that you see in this relationship? Number one, I see aspect of familiarity. Let's say, for example, you've had a long-standing relationship with a person, let's say for 11, 12 years. Do you think that person you can easily compromise when it comes to such a person? I see something long-standing relationship, which basically brings the aspect of familiarities. Are we together? Is that true? Do you see a long-standing relationship in that? I want us to engage. It's not just about answers. It's about working together. Team, don't be quiet together. These classes should be very engaging. So the fact that there has been a 10 years standing relationship that brings the aspect of familiarity. Imagine having had a relationship with somebody for 10 years. That person knows your patterns altogether. So in terms of work, professional work, such a person can easily compromise due to the aspect of familiarity. But I'm also seeing the aspect of what we call advocacy. Do you see advocacy? Where the audit firm is basically promoting the shares of Magari Limited. There is the aspect of advocacy. What do you see again? What do you see again? The self-interest, are we together? The self-review and self-interest. Look up, in audit, we're saying that a firm should not basically depend, in terms of audit fee. If more than 15% of your revenue comes from a single firm, in this case, 30% of revenue that is for Zawadi Limited comes from what? Magari. So if a firm heavily depends on, if an audit firm heavily depends on a firm, it creates what we call a self-interest threat. Do you think if that firm was on the wrong, if this firm was basically doing something wrong, you know that when you share, you're going to lose your job? Definitely. There's review also in that. So what is the question that they are basically asking? What is this question that they're basically asking? So they're asking, evaluate 5 ethical threats from the engagement between Zawadi and Associate Limited and Magari Limited. Evaluate what we call 5 ethical threats to engagement that is between Zawadi, ethical threats to engagement. So we call it ethical threats threats to engagement. So we say between the Zawadi and say Zawadi and associate, Zawadi and associate, and what's called Magadi Limited, So what we call ethical threats between the engagement between Zawadi and Zawadi Associate and Magadi Limited. So one of the threats, we call it familiarity threat. So we have it as familiarity threat. So one of the past threats is, we call it familiarity threat. So we have familiarity threat as a result of 10 years. We have it as a sum. Farm has been auditing. We call it farm has been auditing, has been for the past 10 years. The farm has basically been auditing Magadi for the past 10 years. This basically impairs their job. This will impair. This impairs what we call their judgment. This association, and you say with the client, due to the long association, and you say with the client. Is that point clear? If the point is clear, you give money yes. So the second threat, we have it as what we call it self-interest threat. The second, we call it self-interest threat. So the second, we basically call it self-interest threat. And you're saying that farm draws significant portion. Farm draws what we call significant portion of what we call of its income. And significant, this is 30%. You can state 30%, significant portion of his income from Magari. And I can notice this is 30%. So if it draws a significant portion of its income from Magari Limited, what is the danger of that? If it draws a significant portion, we basically understand that therefore may end up doing anything. Let's say not to do what? To lose the farm. Which this case is Magari. So their interest will come first, and that is money. Is that understood? If that is understood, we respond with yes. Respond with yes if that is understood. So the next is what we basically call self-review threat. We have a self, and we call it review threat. So self-review threat. Or the self-review threat, we're basically saying that due to the work, due to the fact, and say that due to the fact that Zawadi, and say an associate, due to the fact that Zawadi and associate offers what we call taxation, services, and you say in addition to what we call assurance, services, in addition to assurance services. So they say this would mean because aspects of taxation, you also need to provide what you call assurance. So this would basically mean, and to say that this would mean that they may be auditing, that they may be auditing what you call their own advocacy threat. Basically emanate from the fact that the farm is basically promoting the shares of Magari, which can publicly, the farm publicly involved Involved, we say involved in promoting. Involved in promoting what's called the shares of Magari Limited. The firm basically is publicly involved in promoting the shares of Magari. So if they do that, that basically impair this. We basically understand that would basically impair independence. Impairs what's called independence. This will basically impair what's called their independence in appearance, independence in appearance as an auditor. Together, team. So we can have one last one. So we needed threads. How many threads? We can have the last thread. We can have the last thread. So on that last thread, we say the management thread due to the fact that management thread, and say due to the fact, so we have what's called the management thread due to the fact that from time to time, what happens from time to time? We are talking about the management thread due to the fact that from time to time, partners in Zawadi and associate, due to the fact that from time to time, partners in what we call in Zawadi, and say an associate, partners in Zawadi and associate, due to the fact that partners in Zawadi and associate are basically called upon. What are they called upon to do? Called upon to do what? To sit in a board meeting. To sit in what's called in a board meeting, and you say ends, and you say acting as. Hence, these guys are basically acting as what? Acting as management of the company. Acting as management of what they call of the company. Hence, these guys basically act as the management of the company. That was question 1. 10 marks, 6 marks for the first one. That is 1 Roman A, 4 marks for A Roman 2. Then finally B is 10 marks. Is that question doable? And do we have that in our notes? If we have that in our notes, we respond with a yes. Perfect. So when it comes to this audit and assurance, that is, nobody should, this one you should score 90s, 80s, 90, and 100. Yes, because if you look at what we've done, it should be, so this question 2A, it's something on emerging issues altogether. These are basically on emerging issues altogether. So I have a question number 2. Question 2 is part of emerging issues that I'm supposed to discuss on a Sunday together. But however, we are going to discuss it. Question 2, Roman A, is part of emerging issues that I'm supposed to discuss on what we call on a Sunday together. A is part of emerging issues that I'm supposed to discuss on what we call on a Sunday. Emerging issues that I'm supposed to discuss on a Sunday. But I will explain them. So we say explain the following terminology. Explain. Number 2, explain. We call it explain what. Blessy, have you heard of that term? Have you heard of that term, Blessy? Jackie, have you heard of that term? It's part of emerging issues, those terminology. Have you heard of that term, Eden? So we go to it. What is social engineering? When we talk about social engineering. Social engineering. Social engineering. This is crafting. It comes from the aspect of crafting. So we say that when we talk about social engineering, we say use of what we call deception. We say use of what we call deception. Deception. You're basically using deception to manipulate individuals To do what? To manipulate. To manipulate. We say to manipulate. To manipulate individual. Individual. And why are you manipulating individual? To divulge. The word is to basically divulge. To manipulate individual, basically to divulge. What we call confidential. Confidential, to basically divulge. What we call the confidential. To basically divulge confidential information. Information. To divulge what's called confidential information. For what? For what purpose? Why would you want that? To divulge what we call confidential information for fraudulent purpose. For fraudulent, call it fraudulent purpose. For fraudulent purpose. For basically what's called fraudulent purpose. If you've done ICT, you remember looking out for phishing attacks online. We can talk about phishing attacks. Phishing attacks. Give me a yes, so that we work together. So then we have what's called embedded audit facility. Embedded. Embedded. We have it as embedded. Embedded audit facilities. Audit facilities. So we call it embedded audit facilities. What are embedded audit facilities? It's good to see you, Wiko Dangote. You have been lost as a representative. I hope you are now fully in for blocks to that end. So embedded security, embedded audit facilities. What are these? What is embedded audit facility? So whenever we touch on embedded facility, audit facility, so this will call it a technique where programs, it's a technique or a program, and additional data is a technique where program and what you call additional data that you say that is provided by auditor are basically incorporated in a computerized system, are incorporated in a computerized system. So when you talk embedded audit facility, we are saying that it's a technique where programs or additional data provided by auditor is incorporated in a computerized system. Together, team. A technique refers to what we call a technique. Refers to what we basically call a technique, where programs, we call it where programs is a technique, basically where programs and what we call and additional data, and we call it additional data, and additional data is a technique or a process where additional data are provided by auditor, provided, and say by an auditor, provided by an auditor, provided basically by an auditor, say are incorporated, we say are incorporated, basically are incorporated, and the word is in what's called in a computerized, are basically incorporated in a computerized, incorporated, basically are incorporated, and the word is in what's called in a computerized, are basically incorporated in a computerized system. That is embedded audit facility, are incorporated in a computerized service together. So we say enable continuous review and accounting system. So this one enables, when you have this, enables what's called a continuous what we call reviews, continuous review. When that data or programs are basically put into a computer system, it facilitates what we call a continuous review. Is that understood? Give Mwalimu a yes if that is understood. That is embedded audit facility. Then we have what we call the last one. We call it integrated. The last definition, we basically call it integrated. We call it the integrated. We call it the integrated test facilities. Test facilities. So when it comes to integrated test facilities, this is a technique. This is basically a technique that enables the auditor. We say is the technique that basically enables the auditor to test what? Enables the auditor to test an application logic technique that we say that enables what's called the auditor to do what? To test. It enables the auditor basically to test, and we are testing what we call logic, and you say and control. The word is logic and control during normal, and control during what's called normal operation, and control during normal operation. So it's basically a technique. This is tech. When I say it's basically technique, call it technique, that basically enables the auditor to basically test logic and control during normal operation. Provide me the yes if we are together on that question. That is question 2. Question 2, December 2025. I want us to proceed to question 2, Roman B. Turn to that paper that has been shared. Question 2, Roman B. Question 2, Roman B. I want us to touch on that question 2, Roman B. And I believe that question is something that we've done, and we did it very recently. If you look at that particular question, so let's turn to that question. The examiner tells us that when an auditor uses what we call audit sampling, and we understand what sampling is and why we carry out sampling, the objective is to provide what we call assurance. The basis to provide reasonable, the objective is to provide a reasonable basis to draw conclusions about population from which sample is selected. So when you talk about sampling, you're saying that because a sample could be huge altogether, and you may never carry out an audit of a huge sample, of a huge population. Sometimes you find the population is so huge. So you basically do what you call sampling altogether. You do what you call sampling because of time. Are we together? Because you may never have time to carry out audit for the whole population altogether. But when it comes to sampling, we're also very keen that a number of factors would basically determine the kind of sample that you basically take altogether. If the risk level is very high, are you going to take a smaller sample or a larger sample? If the risk level is basically high, are you going to take a smaller sample or a larger sample? If the risk level, if you notice, are you going to take a smaller sample or a larger sample? Perfect. So we get to the first question, that is B Roman 1. Distinguish between statistical sampling. So it talks about distinguish. We talk about distinguish, and you say between. The word is between statistical sampling, statistical sampling, and non-statistical sampling, and non-statistical sampling. Distinguish between what it calls statistical sampling and non-statistical sampling. My first question, have we done that in class? Have we done that? What it calls statistical sampling and non-statistical sampling. My first question, have we done that in class? Have we done that in class? I always love asking the students because sometimes students say exam is hard. Have we done such a thing in class? Has such a thing been done in class? People don't want to support me, but I hope I've done that. I hope I have. Yes. I also need you to, yes. So we start with what we call sampling, statistical sampling. Statistical statistical sampling. So if you look at the definition that we had, there were two things. It uses mathematical approach. Statistical is basically on mathematical approach, where you basically use what we call probability together. We basically talked about statistical using what we call mathematical approach, where you incorporate what we call probability. So we can just say involves what we call random selection. So we can solve random selection. We can talk about random selection. This one basically involves random selection. We call it random selection. Of a theory to do what? To evaluate the sample. To evaluate what's called to evaluate the sample. But you can just say mathematical approach that uses what we call probability to evaluate the sample. Is that noted? You can simply say mathematical approach that basically use what we call probability to evaluate what's basically called the statistical. That is statistical. So then the second, we call it non-statistical. Non-statistical. We call it non-statistical sampling. So what would be non-statistical sampling? Someone will tell me the opposite of statistical. So it does not use probability, but this one uses the auditor's judgment. This basically uses the auditor's judgment. So we talk about where auditor does not use statistical, where we say the auditor does not, the word is does not use what we call statistical. So basically say, in this case, the auditor does not use what we call statistical, but you say statistical method, but make sure that Mwalimu also need encouragement. Yes, Mwalimu also needs encouragement by just responding. So then we have the next part of it. Again, this is also something, describe 4 methods of random sample selection. Describe, there were a lot. Describe what they call 4 methods of what they call of random selection. If you've been very keen, random sample selection. So describe what's called 4 methods of random sample selection. So if you've been very keen, was this done in class? This was definitely done in class. So we can talk about simple random sampling. We can talk about simple. One is simple random sampling. Simple random sampling. So when it comes to simple, we say selection of sample, selection, we talk about simple selection of what is basically called sample. Sample, the word involves. So when you're basically selecting the sample, it basically involves, we say involves random, and we call it numbers, random numbers, tables. We call it the random numbers tables, or what you call the random, or what you basically call the random numbers generator. Random numbers generator. Ensure that all items in the population have equal chance. So this one ensures all items in what's called in the populations have what we call have equal chance. So they have an equal chance to be selected. So whenever we talk about a simple, the essence of the random numbers is basically to ensure that all items in the population have an equal chance to be selected. Give me a yes. Have an equal chance to be basically selected. So that is the first type. Give me a yes on that. Give me a yes on that. If we are together, you give me a yes. So the second, we can talk about systematic selection or sampling. Systematic, we can talk about systematic selection, statistical sampling. Systematic selection, statistical. The word systematic, the word systemic. Selecting items, so we say selecting. So this is basically selecting what we call items. You're basically doing what? Selecting items, selecting items, using items, selecting items, using what we call consistent, using consistent intervals, and you say between, intervals between, selecting items using what we call consistent intervals between selection, between what we call selection, between selections. So we have the word consistent interval between selection. Are we together? The first interval having a random start. The first interval having what's called having a random start. So this is basically selecting items cluster mean. When it comes to talking about cluster, what does a cluster mean? So you're dividing population into groups, and those groups are what we call clusters. So population, so the word is population. We say population is what? Is divided, and the S is divided into what we call into groups. Populations, we say, are basically divided into groups, and those groups are basically known as clusters. Those groups are basically known as clusters. So basically have population being divided into groups, and those groups are called clusters. And you say they're usually, so they're usually based, when you talk about cluster, we say they're usually based when it comes to cluster. They're usually based on geographical, based when it comes to cluster. They're usually based on geographical, or what's called, or existing. The word is existing classification. So how do you select them? On geographical or existing classification. So classification is made on geographical or existing classification, such as value of risk, such as so an auditor basically randomly selects a cluster rather than what? Rather than a single item. So then we have what we call stratified. Stratified, we can talk about stratified sampling. Stratified sampling. When it comes to divide population into smaller, so we say divide and say population into what we call into smaller, divide non-overlapping groups that we call the strata, and say based on shared characteristics. This is based on what's called on shared. So the word is shared characteristics. Based on what's called shared characteristics. Non-overlapping groups that are known based on shared characteristics, such as what we call value or risk. Such as value or what we call or risk. Such as value or the risk level. So that is how you basically, based on shared characteristics, based on value or risk altogether. So sample is then drawn from stratum. Sample is basically drawn from stratum, based on shared characteristics or value or risk. Then you say that the technique is useful. We say the technique is basically useful in what's called in heterogeneous So this technique or certified is basically useful in heterogeneous population to do what? To allow auditor, we say to allow auditor, we say to allow the auditor to do what? To focus, not focus college, to focus, or you can say focus college, to focus on higher value item, focus on higher. What we are doing, we're just enjoying the bigger work that we've done. Yes, the bigger work was done in class. Yes, we are simply just enjoying what we're doing. Is that true, Jacqueline? That the bigger work was basically done in class. Most of the work was done in class. So now it's time to just enjoy the fruit of our labor. So then we get to Roman C. We get to Roman C. So we're going to discuss auditor's responsibility. Auditor's responsibility in detecting errors, fraud, and irregularities in audit engagement. So we say, describe auditors, the C describes what we call auditor's responsibilities, describes what we call auditor's responsibilities, auditor's responsibility in what we call in detecting, we call it in detecting errors, fraud, and we call it irregularities. In detecting what you basically call errors, fraud, and illegality in an audit engagement. In an audit engagement. I asked, was this topic done? Was that topic done? Errors, fraud, and irregularities. If it was done, you give me yes. Perfect. What is the auditor's responsibility in detecting errors, fraud, and irregularities? What is the auditor's responsibility? And say in detecting errors, fraud, and irregularities. Errors, fraud, and what you call irregularity. Number one, what is the primary objective of an auditor? So how would you classify detection of errors and fraud in relation to give an audit opinion? So the examiner asks us, describe what's called auditor's responsibility. Describe what's called auditor's responsibility, and say in detecting errors, fraud, and irregularities. What is this responsibility? So is the main responsibility of management and irregularities. What is this responsibility? So is the main responsibility of management basically to detect errors and fraud and not the auditor together? Are we together? So at the back of your mind, you need to understand that the auditor cannot be held responsible. The auditor can never be held responsible for prevention of fraud and error. At the back of your mind, because this is secondary, an auditor, we say that cannot be held responsible. This is the work of management, cannot be held responsible for prevention, for what we call for prevention. The word is prevention, for prevention of what we call fraud and errors. Is that true? That is true. An auditor, this is just to say, by the way, is secondary. It cannot be held responsible for basically for being responsible for we'll just give it as external auditor, sorry. External auditor cannot be held responsible for basically for prevention of fraud and errors together. Evelyn, is that okay? An external auditor can never be held because that's not the primary objective. So it can never be held responsible together. So, or auditor should basically make inquiry for management and others within the entity, 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 should make inquiry from management and others within the entity, whether they have knowledge, whether they have knowledge, where they have the knowledge of any actual, of what they call of any actual, or what we call or the suspected, we call it suspected, or alleged fraud in an entity, or alleged fraud in an entity. So that is the first responsibility, making an inquiry from the management or others in the entity, or others in the entity, within the entity, whether they have knowledge of any actual, suspected, or alleged fraud in an entity. That's the first responsibility. Together, team, give me yes if we are together. Give me a yes if we're together. Nipatie yes kama tuko pamoja. The second is evaluation. The second, I want us to talk about evaluation. The second, I want us to touch on evaluation. So I just want us to be easy. Now it should be easy. Till the time that you're doing exam, we should have easy time. Nobody should be under duress. Evaluation. So when it comes to evaluation, auditor should basically evaluate. Auditor should basically auditor. We say should do what? Should evaluate. The auditor should basically evaluate. We're saying that the auditor should evaluate, or unexpected, or what's called unexpected, unusual, or unexpected, relationship, and we say that relationship that what's called that have been, auditor should basically evaluate whether unusual or unexpected relationship have been identified. We say have been identified in performing. So the word is in performing analytical, we call it analytical procedures. We say may indicate what's called indicate risk, and we say of material misstatement, risk of what we call material misstatement, risk of what we call the material mistake, risk of material statement. So the second evaluation, auditor should basically evaluate whether unusual or unexpected relationships that have been identified in performing analytical review have indicated what's called have indicated risk of material misstatement. Together, that is the second auditor's responsibility in relation to errors, fraud, and irregularities. Whether unusual relationships that have been identified when you're performing ARP, so together, may indicate what you call risk of material misstatement. So the second is what's called evaluation. But it's not that auditors cannot be held responsible for fraud and errors. That is the responsibility of management altogether. Elizabeth, give me a yes if you're together. So the second is evaluation. Is that understood? If that is understood, we respond to this. If that is understood, then we have written representation. So this is an auditor's written representation. So we have what's called management written representation. This is Where there is no, on issues that are material, on issues, we say that on issues that are basically material, meaning the omission or misstatement, basically affect the financial statement. If there's no sufficient evidence, then the auditor needs to have what they call a written representation. Are we together? Examples of unwritten representation. Examples are minutes of the board. So we say unwritten representation as the third responsibility. Examples of unwritten representation. Examples are minutes of the board. So we say unwritten representation as the third responsibility of an auditor. We are saying that auditor should basically obtain a written representation from the management concerning the following. One of the things, number one, is management, and you call it acknowledgement. Acknowledgement of what they call of their responsibility. Of their responsibility, a written representation of their responsibility to ICS. To ICS. So what is that responsibility to ICS? The management should be responsible for designing an efficient, they should be responsible for designing, we know that designing and maintaining what you call a system that basically detect and prevent fraud. It is not the role of an auditor to come up with a system. Are we together? In relation to written representation, we think that auditor should basically obtain this representation from management, that they have a responsibility to the ICS, that is designing and maintaining a system that can basically detect and prevent fraud. To the ICS, that is designing and maintaining a system that can basically detect and prevent fraud. Are we together? And you say that when it comes to analysis of the ICS, the responsibility of an auditor in relation to ICS is that they can look at the system, and once they see there's something wrong with the system, they're supposed to do what? They're supposed to report it to management through what you call a management letter. If they find there's deficiency in the system, the role of an auditor is basically to report this to the management through what that better. But when it comes to the ICS, that is making sure that you design a system and maintain a system that is proper, it is the work of the management. So as part of the responsibility, an auditor should basically to have a strong system that is able to detect and prevent what we call fraud and errors. Are we together? Then say disclosure, management disclosure. We can talk about management disclosure. Disclosure. And say to the auditor, management disclosure to the auditor, that management disclosure to the auditor, the results of assessment, we say results of what we call of assessment, we say results of what we call of assessment, that the results of what we call assessment of what we call of the risk, assessment of the risk, of what we call of material misstatement, of the material misstatement, of the material misstatement as a result of fraud, as a result of fraud. So as part of written representation, disclosure to the auditor as the result of assessment of risk or material misstatement as a result, that they disclose that to the auditor. Are we together? So lastly, this one is something very interesting. Professional, they should basically exercise what we call, lastly, in relation to fraud, professional, they call it professional skepticism. Skepticism. What did you say is professional skepticism? I taught on the professional skepticism. What is a professional skepticism? Being alert in relation to fraud. When you talk about professional skepticism as a responsibility of an auditor towards fraud and errors, what is professional skepticism? So being alert together, an auditor should basically be alert to any fraud, errors, and irregularities together. So this is an attitude of expression to the financial statement altogether, where an auditor we say should do what? Should basically be alert and sound to any fraud, errors, and irregularity. Are we together? Are we together? Respond with a yes. Are we together? Are we together? Perfect. Are we together? Are we together? Are we together? Respond with a yes. Are we together? Are we together? Perfect. Are we together? Evaluate. They can also evaluate appropriateness of accounting policies. We can talk about evaluating what they call appropriateness of accounting policy. Appropriateness, because this appropriateness of what they call of accounting policies. Because this is definitely what is going to lead to fraud. So they can also evaluate the appropriateness altogether. But again, also design what's called appropriate audit procedures altogether. Are we together? Design appropriate audit procedure. Again, we can talk about designing what's called appropriate audit procedures. Audit procedures. If you look at our notes, did you touch on these things? If you look at our notes, can you say that Mwalimu, yes, we did touch on this? Did you touch on that? Give me yes if you touched on that. If you're very keen on what we're doing, we did touch on that. So do we need a break or we don't need a break? Do we need a break or we don't need a break? So I've done two questions, question 1 and 2. Yes, you can have the break. Then you come back 10 minutes, then you come back. So I've done question 1 and 2. That is December 2025. Yes. Question 3. That is on December. So we can question 3, 2020. So we have it as question 3. So question 3. So on question 3, so are you on it? If you're on it, respond this. So being told that with reference to international standards of auditing, that is the ISA 230. So what does ISA 230 talks about? That is audit documentation. ISA 230 is audit documentation. We have it as audit documentation. ISA 230. So being told, describe 5 roles of audit documentation. Describe 5 roles of what I call of audit documentation. Let us say in supporting auditor's opinion, and what you call an accountability. And what you call an accountability. In opinion and documentation. Did you talk about audit documentation? We talked about working papers, and we talked about document. So what is the role of audit documentation? We talked about working papers, and we talked about document. So what is the role of audit documentation? Role of audit documentation in supporting auditors' opinion and accountability. So one of the first role is evidence of work performed on the basis of conclusion. Number one is evidence of work. Evidence, it acts as evidence. This documentation, audit documentation, evidence of work done, evidence of what they call of work done, evidence of work done, and the basis of conclusion. Evidence of what you call the work done and the basis of conclusion. Together, team. So the first is evidence of work done. How does audit documentation? That is evidence of work done and the basis of conclusion. So you can tell how an auditor basically arrived at the opinion. If it was a qualified opinion, how did he arrive at that qualified? Unqualified opinion, evidence to support the work. If you're talking about X and Y, there's evidence basically to support on that. Get that team. If you're talking about X and Y, there's evidence basically to support on that. Get that team. That is the first one. Give me a yes if you're together. The second, support quality control and external. So it does support what's called quality control. It does support what's called quality control and what's called an external inspection. It does support what's called quality control and what's called inspection. Then you have provide accountability. This documentation basically provide accountability. And legal defense if challenged. And legal, those documentation will be legal defense if challenged. Legal defense, let me say if challenged. If it's challenged, the act of legal defense. If an auditor is basically challenged, legal defense, let me say if challenged. If it's challenged, the act of legal auditor is basically challenged. Legal defense, and you say if challenged. Legal defense, and you say if challenged. Then you can also talk about ensure continuity. It does ensures what's called continuity. It does ensure what's called continuity when audit staff change. When audit staff change. When audit staff change. Staff change. So there's continuity because there's the working purpose. It does ensure what's called continuity when the audit staff basically change. But at the same time, use of training, used in training of audit staff. So used, say, in training of what they call of the audit staff. We can basically use them in training, what we basically call audit staff altogether. So we can also talk about facilitate. We talked about support quality control and external. So we can also talk about facilitate supervision and review of audit work. Facilitate supervision, and the word is review of what we call of audit work. It does facilitate supervision and review of what's called the audit work. It does facilitate supervision and review altogether. So again, it acts as compliance. We can talk about compliance of audit requirement. We can talk about compliance, to what they call to audit requirements. Documentation is part of compliance to audit requirements. Are we together? Of audit requirements and regulation framework. And regulation, you must have documentation and regulation framework. So we have compliance to what we call the audit requirements and what we call the regulation requirements. Give me a yes if you're together. So that is number 3. Describe the roles of audit documentation in supporting auditor's opinion. Do you have something like that? Importance of documentation. Do you have importance of documentation, audit documentation? Do you have it in the notes? Importance of audit documentation? Yes, we do. So the next question, we just talked about it, implication of inadequate. So B talks about, that is Roman 2, 5 implication. We call it implications of inadequate of in Roman 2, 5 implication. We call it implications of inadequate of inadequate, and call it audit documentation. So 5 implication in adequate audit documentation during quality, during what's called quality, during quality reviews, during quality. So if you have inadequate papers or documentation, one of the things is that what you call inability to justify opinion, which can you'll not be able to justify an audit opinion. Are we together, Blessy? Are we together, Elizabeth? Are we together, Jacqueline? So one of the implications of what you call inadequate audit documentation, you're not able to justify what's called audit opinion. And once you're not able to basically justify an audit opinion, it eventually leads to what you call, it does eventually leads to what you call audit, audit failure. So if you cannot justify audit opinion, it does lead to what you call audit failures together. So that is one of the implications of inadequate documentation. It will eventually lead to what's called audit failure or lack of, you may not be able to justify your opinion. And if you're not able to justify opinion, and therefore it leads to what's called an audit failure. Respond with a yes. We can stop at that point and pick on others in our next class. But in our next class, I want to finish with this paper. So we make sure that by 6, that is on Thursday, by 6 we're in class, we start the class by 6. And we make sure that there's no break. If there's no break, we shall be able to finish on this. Is that okay? So our goal is to finish this paper. That is December 2025. We make sure that we're done with it so that I come up with the mock papers that I have. So I want us to pick the first question. That is August 2022. August 2022. That is question B. Question 4B. August 2022. Question 4B. We kickstart on that. Question 4B. So if you're there, we respond with yes. If we are there, then we give it a yes. If you're there, then we give it a yes. So say August 2022, question 4B. So we have it as August. So that is on VAT. VAT, August 2022, question 4B. Question 4B. Question 4B. Are you on it? If you're on it, you give me a yes. If you are on it, you give me a yes. You respond with a yes if you're together. Perfect. So we've been told that Zawadi associates, Zawadi associate, Zawadi associate, Zawadi associate provides consultancy services to various clients whose terms of contracts allow clients to pay for the services either before or after provision. So terms of contract basically allows the client to pay either to pay for services before or to say or after provision of service. So then we've been told that the following information is provided regarding the firm's transactions for the month of October, November, December, October, November, and December 2021. So then we have the nature of service. We have what we call the nature of service. So number one is audit services to Excel Supermarket, valued at a figure of 700,000. That was basically the service provision was on 25th October. Then the payment date is November 2021. The payment date is basically November 2021. November 2021. Give it a yes if you're together. If we are together. So what is the tax point based on information that we're given? What is the tax point based on the if we are together? So what is the tax point based on information that we're given? What is the tax point based on the information we have? So based on the information that we have, what is the tax point? What is the tax point based on that information, number one? So the tax point is basically October. So then we have training services to Kyle Security. The value the value of the service is basically 240. The value of service is 240. Then you say not yet paid. The value of services, the service was November 2021, and the payment date not yet paid. So what is the tax point? The tax point. The tax point is November. Perfect. So then we have consultancy. We have what's called consultancy services. And you told what total children's home. So the figure is 600,000. We have December. The service provision is basically 5th December. We have it as 5th December 2021. Then the payment date is basically November 2021. So what is the tax point based on that information? But what is the tax point based on that information? So the tax point is basically November. So we're told what total children's home. That's not a charity unless we're told that's a charitable organization. Then you have what you call debt collection service to Zuela, debt collection services to Zuela computers, So the figure is 820,000. So we have the service provision date, that is 9th November 2021. Then you have the payment date as 30th November 2021. Then you have the payment date as 30th November 2021. As 30th November 2021. So what is the tax point? The tax point is, for that, what is the tax point? The tax point is November. So then we have strategic plan development in Rwanda. Number one, strategic plan. We have Basel in Rwanda. Mention of Rwanda. How do we call that service? Is it a standard rate service? Is it a zero rated? Is it an exempt? To Basel in Rwanda. Services that are provided, that should be zero rated because that is outside the country. So the figure is basically, the figure is 2,150,000. Service provision is basically 10th November, then not yet paid. So what is the tax point in relation to that? The center, what is the tax point in relation to that? So the tax point is, based on that information, the tax point is, what is the tax point? The tax point is November again. So look up, look up. So the management consultancy, we have Shylock's investment. We have what's called the Shylock investment. So for the Shylock investment, the value of the service is basically 1,440,000. Then the service provision date is basically 13th November 2021. Then we're being told there's an information. There is an information here. The service date is basically, there's an information. So we have an information, 40% paid, 40% paid on 13th November 2021. So it basically means 60%. 60%. It basically means that 60% was not paid altogether. But in terms of, it basically means that 40% was the one that is paid, and 60% is yet to be paid. Is that true, Tabs? Tabs, is that true? 40%, or we are going to charge VAT on the whole amount? So we're basically going to charge VAT on the whole amount altogether. We are going to charge VAT, and we say on the whole amount. So then we have the next, we're being told that internal control reviewed. So we have what's called the internal control reviewed. That is Lemma Limited. So the figure is the value of the service. So we have what's called the internal control reviewed. That is Lemma Limited. So the figure is the value of the service is basically 960. The value of the service is 960. The value of the service is basically 960. 960. So being told that service provision is basically 18th November 2021. However, if you look at the payment date, the examiner tells us that 10% paid on 7th of October 2021. That 10% was basically paid on 7th October 2021. So 7th October 2021. So what is the tax point in relation to that information that is given? What is the tax point? Is it October? Is it November for that particular entry on internal Zipporah? So Zipporah, what is the tax point? The tax point is basically October, because the earlier is the down payment was basically done on 10th. That is 10% on 10th of October. Perfect. Then we have the last information. We have the last information. So on the last information, we are being told that financial consultancy. We are being told that financial consultancy to W Limited. The total value of the service that is on the financial consultancy, the figure is 1.2 million. The figure is basically 1.2 million. So we have the service provision date as 20th November 2021. However, so being told that Shylock investment, so we're being told that Shylock's investment was declared bankrupt, was basically declared bankrupt on 30th November 2021. How do we deal with the bankruptcy? Was basically declared bankrupt on 30th November. On 30th November 2021 on 30th November 2020, relief on it. Are we together? So the bad relief is basically going to come on what amount is going to be a bad debt relief? The percentage that we are going to claim bad debt relief is a figure of, is it all amount? 60%. Thank you so much. So then we are being told that on 5th November, on 5th November, on 5th November 2021, Zawadi Associate renewed and national training licenses for 30,000 and paid for legal fees. The figure is 360 to follow up clients who are not paying as per the agreed date. So the national training, the national industrial training license of 30,000 and paid a legal fee. Paid a legal fee. How do we treat them? How do we treat them? How do we basically treat them? How do we treat them? How do we treat them? So which one is input? Which one is not input? Which one is input? Which one is not input? So on the additional information number 3, electricity bill paid, electricity bill paid, electricity paid, bill paid on 10th November, on 10th November, on 10th November 2021 was 270. Are we together? Electricity bill that was basically paid on 10th November, we say 10th November 2021 was 270. Are we together? Was 270. Are we on each team? We are being told was 270. Give me a yes. Perfect. So out of which, look up team, out of which 100,000 was payment for outstanding bill on October 2021. So 100,000 was basically for outstanding bill for 2020 October. So that 100,000, are we going to claim VAT on 100,000? The figure of 100,000. Are we basically going to claim VAT? No, why? Because the tax point was basically October. So we are in agreement that the tax point was basically in October. So the tax point was basically in October. The tax point was basically in October. So we respond with a yes if we're together. The tax point was basically in October. Are we together? So the next information, so 20,000 in shillings, 20,000 was in respect to additional deposit, was in respect to what they call, was in respect of additional deposit as demanded by company power. Additional deposit as demanded by company power. Are we going to claim VAT for the deposit? Remember, that's not an advance payment by the deposit. Are we going to claim VAT on it? Remember, that's not an advance payment by the deposit. Are we going to claim VAT on it? Are we going to claim? No. How are we going to treat that fuel? So being told that the examiner is very clear and says that fuel for what they call for partners' vehicles amounted to 90,000 during the month of November. How are you going to treat for the partner? Is that a business expense or a private expense? Yes. Is it a business expense or a private expense? That's a private expense altogether. Yes, based on 20. So we don't claim VAT on the private expense. Together, team, we don't claim VAT on that private expense. So then we proceed to the next. We're being told that Zawadi, before that, we are being told computer purchase for business, use cost of this computer purchase for business, use cost of 240 in November. So for the computer purchase, what are computer purchased? Computer purchase for the computer purchase. That is an input VAT. That is on purchases and expenses. Then the second last, Zawadi associate paid rent for the month of November, amounting to 180. Paid rent for the month of November, amounting to 180. That is on 5th November 2021. On 5th November 2021. How are we going to treat that? On 5th November 2021. So what is that? So that's also statement basically mean. That statement. What does that statement basically mean? As I forward something to somebody. What does that statement basically mean? A minute as I. What does that statement mean? What they say have been stated inclusive of VAT. So what does that basically mean? If you say they have been stated inclusive of VAT, inclusive of VAT. So what does it basically mean? Inclusive of VAT. So what are we using? Sorry, maybe I was not looking at what you're saying. Just repeat again. That is 16 over 116. Perfect. Is everything understood before we go to the required? Is everything understood? Is everything understood? Perfect. So is everything understood? Perfect. Perfect. So then we go to the required. Compute what we call the VAT payable into bracket or refundable to Zawadi associate for the month of November. To Zawadi associate in the month of November. We can open a T account because there's no exempt in this. We can open a T account or we can do them separately. So I think we can just work it out separately. So which one do you want us to start with? Should we start with input or output VAT? We start with the output VAT. Is that okay? We have audit services. Are we going to include audit services? We're saying for the month of November. So my question is audit services to Excel Supermarket. Is it falling in November? No, it's not falling because provision was October. That is the tax point, so it's not falling. What about training? Training of services to Kylie services. We just noted Kylie services training. Just training by Kylie services. So that the tax point is November. So the tax point for that is November. So we have it as 240, 16 over 116. Give me that. 16 over 116. Give me that. 16. And you say over 16. So you're the guys to support me on that. 16 over 116. Support me on that, team. You're the only guys I have. So there's none that have. So that should be 33, 103. So we have it as 33, 103. 33, 103. So what about accountancy services to Watoto? Is it falling? Is it falling on November? Which one comes first? The payment. So that is falling on that. So accountancy to Watoto Children's Home. I know some people say that this is exempt. No. When they say children's home, that is not specifically mean that is a charity. So that should be 600, 16 over 116. Get for me that. You're the guys giving me that. Give me that. Somebody has already gotten it. What is the figure? So you have it as 82. Debt collection services to dweller. Is the tax point November? Debt collection to dweller. Somebody says 759. You're the ones giving me that figure, unless you tell me which is which. I'm being told I am wrong, but I'm wrong because you're giving me that. Is it 759 or 5? 759. Thank you. I think that is confirmed. What about debt collection service to dweller? Is the tax point November? Debt collection to what to call to Zuela. See, the tax point is perfect. That is 820. 16 over 116. So what are we having? 16 over 116. What are we having? So that should be 113, 103. 113, 103, 113, 103. So we can move to strategic development. Strategic development. So you have it Basel. And the word Rwanda makes it what? And the word Rwanda makes it what? The word Rwanda makes it? A mention of the word Rwanda makes it? Switch off the video, Joy. Switch off the video. So the word Rwanda makes it zero rated. So it makes it zero rated. So the figure is 21. We have it 50. 0. If you multiply that by 0, that should be 0. So then we have the next. We have management consultancy. Management consultancy over 116. So we have it as 198,621. 198,621. 198,621. So we have it as 198,621. Is that correct? Is that figure correct? So correct. Is that figure correct? So perfect. So then we have the next. We have it as financial consultancy. We have it as financial consultancy, W Limited. So the financial consultancy to W, that is 1.2. So 16 over 116. What are we getting? What are we having? Financial consultancy to W. Financial consultancy to W. Financial consultancy to W. Somebody to give it again to me. That figure, give it again to me. The figure, what is the figure? What is the figure? Somebody just to give it again. 165,517. 165,517. 165,517. 165,517. So look up. Look up. Is there any item that we need to adjust with the output? Is there any item that we need to adjust with the output? Budget. Budget. But look up. Look up. There are two approaches to each together, and those two approaches will still work. So when you see, for example, the two approaches, some people will get, some people will not adjust the bad debts here, but they'll get the VAT payable or refundable is when they less the bad debts, that will still work. Tuko pamoja. That will still work. It will still give us the same thing. I know initially some people would complain and make a big deal out of it and say that bad debt should come because it's coming later. You get the VAT payable or refundable is when you less it. But even if you adjust it here or you get the output, you less from input, then you less the bad debt will still work. So we can adjust it here if you agree on that. So we have the bad debt. So get for me 60%. It was 60% of 1440. Give me the 60% of 1440. What about the audit of XL? So audit of XL, the tax point was October, and the question requires the VAT for November. The pora tuko pamoja. XL the tax point is October. Which one happens first? Service provision. Service provision was in October, basically implying that the tax point is October. Sawa. So then get for me the 60% because you're adjusting. The 60% is what was not paid. So what is the 60%? 864. So we have it as 864. There's 16 over 116, then you less for me that. 16 over 116, then you less for me that. So adjust that for me. 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 So that should be 119, 172. 119, 172. So get for me total output VAT. Total output VAT. So get for me the total output VAT. Total output VAT. So get for me what's called the total output VAT. So we have it as 473. Is that correct? Then we can get the input VAT. If that figure is correct, input VAT. Input VAT. So we have what we call the item, so called supply. We have the amount. We have the VAT rate. Then we have the VAT. Then you have the VAT. So give me a yes if we are together. Give me a yes if we are together. So we move to the output. So the first one is basically, the first one was we have the legal fees. So what is the figure for the legal fees? Legal fees. Give me the legal fees. Legal fees is, what is the legal fee? So what is the legal fee? The figure for the legal fee. Good people? So what is the figure for the legal fee? So legal fee, is it 360? Is it 360? Yes, get for me the VAT on that. Get for me the VAT on that. So what is the VAT on that? What is the VAT on that? The VAT on that. So good people, what is the VAT on that? So that is 49,655. 49,655. 49,655. So the next one should be what to call electricity. Electricity. Based on our adjustments on electricity. Based on our adjustments. VAT. Which figure goes VAT? VAT on our adjustments. VAT. Which figure goes VAT? VAT. VAT. So that was 150. So 150, 16 over 116. So get for me that 16 over 116. Get for me that. What is the VAT on electricity? $26.90. So then we have what we call the next, we call it computer purchased. So say when consumed by partner, that was private. Computer purchase. Computers. We had a figure of 240. 16 over 116. So what is a computer? So you have it as 33. 33,103. 33,103. 33,103. 33,103. 33,103. So then we say that Zawadi associate paid rent for the month of November amounting. So we have the rent 180. We have 16 over 116. 180, we have 16 over. So that should be 24,828. 24,828. So what do we have? Is there any item that I've left? Total input VAT. Total input VAT. Total input VAT. So give me the total input VAT. So 128 to 76 to 76. Respond with yes. 128 to 76. So get the VAT payable or refundable. So VAT payable, so what we call refundable. So that is output VAT minus what we call the input VAT. So what is the output VAT? We have that as 473,931 minus 128 to 76. So get for me that. So what are we getting? Sami kids gets for me 345,655. 345, 345, 655. 345, 655. 345, 655. So that question is done. That question is done. Is that question perfectly done? If that question is at home, you respond with a yes. If that question is, are we together? That question. Then the second part of it, that theory, it talks about the Zawadi Associate is planning to engage the financial management consultants from South Africa to facilitate online training on financial management. Advise associate on tax point in respect to such services. So we talked about the tax point. Did you discuss the tax point? And been able to talk about what in relation to tax point? How would you advise them? So say it's the earlier of, when service is formed, payment is paid partly or only, or invoice is received. Invoice is received, services. Before we move to the next question, we respond with a yes. Before we move to the next question, is that question on the tax point? If you're to advise, that should be at home. Are we together? No, we are not saying importing services. You've been asked. Let me open that question again. Let me open that question again. So this is basically Zawadi Limited is planning to engage a financial management consultant from South Africa so I'm saying, look up, Zawadi Limited, we're being told that Zawadi Limited is planning to engage a firm of financial management consultants from South Africa to facilitate training on financial management assignment. Advise Zawadi on tax point in respect to such services. Yes, that is more of input. Yes, that is more of input. That is more of input. But now the concept is the same, is more of importing those services. Do you think for import, What do you say about import? The normally, imports are normally, wait. Somebody say exempt. Imports. When you carry out an import, what do you do to an import? Tim, we don't forget. They're normally exclusive of VAT, not exempted, but exclusive of VAT. But we must all agree, yes, we must all agree as a team. Yes, perfect. So I want us to pick, that is August 2025. Turn to August 2025 question. August 2025 question. August 2025 question. August 2025 question. That was a very interesting question. August 2025 question. August 2025 question. So that is question 1B. Question 1B. Look at that question. It was a very good question. A very interesting question. A very, very interesting question. Together. So are we on it? Are we on it? Thank you. We can do this question before we step for break. Can we do this question before we step for break? Yes. So we are being told that Barani Enterprise, Barani Enterprise is the value-added tax, that is VAT registered business, involved in the sale and distribution of both taxable and exempt supply. For both taxable and exempt. What is that? That's a noun. Then we say sales made as exempt supplies, 400,000. So the sales made, we call it sales made as exempt, that is output but now exempted. So then we talk about what's called purchase of stationery on credit, purchase of goods for resales on credit, 580. Purchase of goods for resale, that is 520. What is that? What is that? Purchase of goods for resale on credit. So that's an input VAT. Then we have the next, purchase of stationery on credit. That is 116. Purchase of stationery on credit, 116. So somebody asked a question, does credit affect her? Somebody is asking for something, does credit? So let me see what Summit is. Will the credit terms affect? No. Credit will not affect. Even credit will saloon pass will. Are we together? Purchase of saloon car. To make it more interesting, purchase of saloon cars. I've fixed something on that. Purchase of saloon cars will. Are we together? Purchase of saloon cars will. Together. Purchase of saloon car. I've said I want to bring something very interesting on that. Are we together? So that the information makes it more. Yes. Purchase of saloon cars. Wait first. I've not said no VAT. I've just said purchase of saloon car. I have not said, have I said no VAT on it? Have I said that? I have not. I've just said purchase of saloon saloon cars fuel. Is that okay? So don't say no, but or any. I've not said that. Is that noted? Please, we respond with a yes if that information is clear. I hope I'm clear. I've not said no, but I've not said anything. I've just said purchase of saloon car fuel. Then we have what's called payment of entertainment expense for client. That is 58. We have it as 58. Payment of entertainment. Entertainment 8. We have it as 58. Payment of entertainment. Entertainment expense for client. Payment of entertainment expense for VAT Act 2013. Entertainment. How would we? That should be exempted. Together, team, that should be exempted. Are we together? That should be exempted. Perfect. So then look up next. Purchase of saloon car for director. Purchase for saloon car for directors. 1,160,000. 1,160,000. How would you treat that? 1,160,000. So, director, is that a business expense? Is that a business expense or a private expense? That's a private expense. Now tie it to the saloon car fuel. So if you tie it to a saloon car fuel, what does now the saloon car fuel basically means? Saloon car fuel. Saloon car fuel. Saloon car fuel. So it becomes also a private expense altogether. Are we together? So it's also exempted from VAT because that also becomes a private expense. Together. Give it a yes if you're together. Give it a yes if we are together. Are we together? Sometimes those who set exams, sometimes those who set exams. Now I've said I have changed it. Yes, I have changed it based on, you see, when sometimes I change the question, it is based on something that was examiner did not do. So when markers are marking those papers, they're corrected together. They're basically corrected together. You see, sometimes we say that sometimes. Are we together? Mercy. Sometimes when I change questions, I just bring another notion, maybe something that you did not see as you are we together? Mercy, are you together with me? That is what I'm saying. Are we together? It becomes non-deductible, restricted or non-deductible. The word is non-deductible. The word should be non-deductible input VAT. That is the correct one. The non-deductible input VAT. Together, Sami kids. The word is non-deductible page. Look at that, and the VAT page was shillings 230. We have it as 230, and the VAT paid was 232,000. Imported raw materials with custom, and VAT paid was basically, we have it as, and the VAT paid is 232. Then you have the next thing called repair. Repairs, we have it as a repair. We have it as repair. To deliver a truck, trucks used exclusively for distribution. Delivery trucks used exclusively for distribution. That is 58,000. Then we have what's called purchase of goods. Look at this, purchase of goods. Purchase of goods. So we call it purchase of goods. Used in both, look up, used in both exempt and taxable supplies. The figure is 348. What do you think about that? I'm very much interested on that. Used for exempt, and what we call taxable supplies. That's a very interesting one. exempt and taxable supplies. Exempt and taxable supplies. So exempt and taxable supplies. So we say that used for the call, used for goods purchased, we say for both taxables and exempt supply, 348. How would you deal with this? So on this figure, shillings 116, shillings 116. Oh no, all amount for both. Yes, we are supposed to apportion because on that amount we're saying that both exempt and taxable supply. Are we together? What should we allow? We should allow for the taxable supply, for the taxable supply. Are we together? Yes. So we've introduced that rent for business premise to a landlord registered for VAT, shillings 160. So what is that for that rent as the last information? For the last information. For the last information for that. So that's an input. I want us to read additional information and be very keen on those additional information as I read those additional information. Kindly, I want us to be very keen. So the first additional information, so the intro that company uses turnover-based apportionment on the mixed item. So it uses what? Turnover. Do we understand that? A company uses what we call turnover-based apportionment for the input VAT on the mixed. Are we together? So what are we going to say? We are basically saying the turnover that is taxable supplies over total supplies times the VAT on mixed apportionment. Mixed apportionment. When it comes to that, on the mixed apportionment. Together, team, on the mixed apportionment. That is what we call turnover apportionment. Together. Perfect. So then lastly, we have what we call transactions are inclusive of value added tax, are inclusive of value added tax at the rate of 16%. At the rate of 16%, we say at the rate of 16% where applicable. So when you talk transactions are inclusive of VAT at the rate of 16%, what do we use? What do we use? We use 16 over 116. I want us to do one at least. Before I give you a breather, let's do one, the first part of it. Allow me to do the first one is when I give you a small breather. Allow me to do the first one, then I give you a breather. So number one required, compute VAT for what I call for the month of what I call of April. Output VAT, is there anything tricky on that number one? So for the formula, we say taxable supplies. What is taxable supply? This is standard rate plus what? Plus zero rate. But when it comes to total supplies would now be standard plus zero plus exempt. Plus exempt. Kindly give me a yes if we are together. Plus exempt. So further, give me a yes. Perfect. So is there anything tricky on the output VAT? Is there anything tricky on the output VAT? VAT on the mixed supplies. VAT on the mixed supplies. So mixed apportionment, look at the mixed apportionment is additional information, number 25, number 25. Number 25, additional April 2025. So that is mixed apportionment. Together. Thank you, Harriet. Somebody else? Are we seeing additional information number 25, April 2025? Perfect, if we are together. And we're getting ready for exam. We shouldn't panic. We are getting ready. I want us to do this is when I give you a small break. So look up the first one on the output VAT. Is there anything tricky there? Is there anything tricky on that? And you're given 2 marks. The examiner compute what's called output VAT. Is there anything tricky? Nothing tricky. We do it very fast. So this is item, so what we call supply. We have amount, we have the VAT rate, then you have what's called the VAT. So the cells, we have standard rate cells, standard rate cells, standard rate cells. What is the figure for the standard rate cells? So the figure for the standard rate cells, Samikis. I want the figure. The figure is not 160. The figure for the standard rate cells, that is 1,160,000. 1,160,000. What is the rate that we're using based on this question? Are we using 16 over 100 or 16 over 116? What are we using? 16 over 116. So what do we get? 16 over 116. What do we have? 16 over 116. So that should be 160. So another cells. Do you have zero rated? Any zero rated in this question? Is there any zero rated in this question? For this particular question, do you have zero rated? We don't have, but we have exempt. Exempt supplies, we just say exempt supply. What is the figure for the exempt supply? The figure is it 400,000? So we have a dash and a dash. So what is the total output VAT? Total output VAT. What is the total output VAT? Give me the total output VAT. So the total output VAT is 1. That gives us 160. Together, that gives us a figure of 160. Are we together? So with that, the end point is this and this. So if you do that, you have your 2 marks. Is that 2 marks a walkover? That 2 marks, is it a walkover? So take a breather, we come back. I want us to take a breather and we come back. Take a breather, then we come back. Oh, everybody's in. So we get to the second part. We get to the second part. Together, we get to the second part. So we're being told, that determine total input VAT incurred and identify which amounts are restricted under VAT Act of 20. We have it of 20 of 2013. So we get the total input and get the ones that are restricted, amounts that are basically restricted. Total input, and we get input and we get amounts that are restricted. So we have items, stochastic supplies, supply, we have amount, we have amount, we have the VAT rate, and then we have the VAT, and then we have the VAT, and then we have what we call the VAT. Together, team, and then we have the VAT. So our focus is on the input now, total input. From there, we shall be able to identify. First of all, we get the total input. Together, team. First for resale. So purchase of goods for resale. The figure is that is 580. What is the VAT rate? 580. VAT rate. What are we using as our VAT rate? 16 over 116. So we have 16 over 116. So get for me that. So get for me that. So that should be 80. So 80. So you have stationaries. So what is the figure for the stationery? So that should be 116. So what do you have? 16 over 116. Give me that for the stationery. Well, we had it as 80. 87 times 16, get it? What does it give us? We get, first of all, and we note that is, what is the figure? Just, so 12K. So 12K, just note it here, restricted. This is one of the restricted. This is based on VAT Act, non-deductible or restricted. So then we have the next, entertainment. Entertainment. So the figure is 58, 16 over 116. Get me that. And so that is 8K. So again, we need to note that this, I hope you understand what the question is saying. I hope we are together. Restricted, 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 restricted. Then you have saloon car purchase, purchase of saloon car for director, saloon car for directors, for directors. So what is the figure we are having for that? So what should be that? So 160. But you also notice this is non-deductible or restricted. This is another example. So that is restricted. So we proceed to the next. We have imported raw materials. Imported raw materials. So what are we going to use? 100. We just do away with this line. 16 over 100. So get me that 16 over 100. 16 over 100. So that should be 37 120.
Wasn't the 232,000? It's Harriet. I'm asking, wasn't the 232,000 equivalent to 16 over 100?
Yes, see that's 16 over 100 because that's input.
No, it said that the VAT paid was 232,000, right?
I think that was also one of the one of the mistakes. It appears like that, but remember the VAT is not there on that. So just clarify that as clarity on that. The 232 is without VAT. I think the way the examiner sets it, that was the issue. So just note that those figures, those are not, that was the issue. So just note that those figures, those are not VAT. Is that okay? Instruction on it. Are we together?
Yes, we are. Thank you.
Yes. So are we together? Zipporah. There's something on Zipporah. Zipporah. Are you answered, Zipporah? Respond with a yes if you're together. Zipporah, are we together? Zipporah, are we together? Perfect if you're together. We don't want to leave any person behind. So then we come to the next, we have what's called, we have this, we have this, we have, so we have repairs 58, 16 over 116, 16 over 116. We're saying, based on VAT, Florentina, based on VAT Act 2013, we talked about restricted on the non-deductible input VAT. These are purchases that we cannot claim input VAT on. A given example was on catering, entertainment, accommodation, and the private expenses. That is what we call the restricted or the non-deductible input VAT. Together, Florentina. Yes, so that's 8,000. So you can check on the VAT Act of 2013. You can look at that, the VAT Act of 2013. So we have the next, rent for business. Rent for business. So rent for business, what is the figure? I'm repeating. Get for me that, then I repeat. Rent. Get for me for the rent. So for the rent, it's 16. So when you talk about restricted, based on the VAT Act of 2013, are we together? Based on the VAT Act of 2013, we're saying that they are expenses that we cannot offset against the output VAT, and we call them the non-deductible input VAT. A given example, we talked about catering, accommodation. We have accommodation, entertainment, and then we have the private expenses. That is explanation. Joy, are we together? Joy, if you're together, we respond with a yes. Joy, are we together? Thank you so much if you're together. So then we have the option, but remember, I've not put the lookup because that basically we need to apportion altogether. That has to be a portion. So the question is, look up team. Now I tell you why this question. Yes, section 17. So look at this. Look at why this question is such a simple, but then look at its 3 marks. Are you seeing this? So the question, determine the total input. I know some people are wondering if they want determine what you call the total input incurred and identify which amounts are restricted under the VAT Act altogether. So the question, total input, that's why we did this. Then from that, we can basically now get the restricted. Ariet Menipata, Mercy, are we together? Mercy and Ariet, are we together? Naomi, are you there? I hope Naomi is there. Sami Keys, are you there? Just a minute. Somebody says gross. Now I'm saying, Jacinta, if you look at that figure 232, I'm just saying that the person who tested it, that figure should be without VAT, because if you calculate the VAT, then what is the essence? What is the student going to do? I think it appears like the VAT is already there. But I'm saying, treat it as a figure without. That is not VAT, but that is a gross figure, not VAT. Are we together? VAT is not charged. Jacinta, give me a yes if you're together. That is what I've said. Jacinta. So, and then we say that for import we say they're normally exclusive of VAT. Jacinta, I want us to be together. Jacinta, are we together? You're the one we're waiting for. Jacinta, are we together? You're the one we're waiting for. You are the one we are waiting for. Jacinta, are we together? Jacinta, you're the one we're waiting for. If you're together, you give. So we're just saying, you see, for imports are normally exclusive of VAT. So VAT is not on that figure. Are we together? That's why we're using 16 over 100. I want you to respond, Jacinta. If there's anything that needs clarification so that we move away from there. Jacinta, you are the one we're waiting for. Kindly assist us to assist you. Kindly assist us to assist you. Kindly assist us to assist you. Is Jacinta there? She's not in. Okay, that's okay. That's okay. That's okay then. So we had we had the mixed here left. We are very sorry. Then we have purchase of goods. We had the purchase of what we call goods. This is the mixed. So mixed was basically 348. So we have 16 over 116. So what is that figure? But we need to know that this should be apportioned. So now we go to amounts restricted. So we go to the amounts. We call it amounts restricted. So the amounts restricted, we have saloon car fuel. Amount restricted is 12 that. Then we have entertainment. Entertainment is 8. Then we have what they call purchase. Saloon car for directors, saloon car, or what they call for the directors. So what is that figure? Purchase for saloon car for the director? So what is 160? So what is the amount restricted? Get for me the amount restricted. Get for me the amount restricted. What is the total amount that is restricted? The total amount that is basically restricted. The total amount that you say is restricted.